What's good, YouTube? It's your boy Zay. Welcome back to Setup Sunday. Now, before we get into it, I need you guys to go ahead and smash that like button as well as the subscribe button, just so we can get the formalities out of the way. I appreciate you, good folks. Now, in order to shorten these videos, I have been skipping a lot of stuff and just going straight into it. But this week, I do want to go back to the article of the week because this one had some detailed information in it that really outline what we need to pay attention to. So the article for this week is the July jobs report could be what gives the market its next big jolt in the week ahead. Now, they don't cue if it could be up or down, but in this article, and of course the link will be in the description if you want to read further, but I'm going to scroll right down to it because the gentleman in this report outlined exactly what he thought would be a game changer for the market. So here it is right here. This is the section that I really want you guys to key on because game changer for the markets. Friday could be a game changer, Knapp said. Before that, he expects stocks to trade in a narrow range. So we're probably going to be range bound, and we'll cover that when we get to the charts. But here's the part that I want you guys to key in on. If the number of jobs added in July is much higher than expected, at more than 1 million, Knapp said the market could immediately sell off when the idea that the Fed will be ready to pare back its bond purchases. So what does that mean? If Friday's job numbers come out and it's more or over than 1 million, which is, higher than expected, they expect the market to immediately sell off. So we need to pay attention to that. So we start the week off rallying. Clearly, people know something and they could be expecting a higher jobs report, and they're just trying to sell out of their positions before the big sell-off happens. So if the number is weaker, though, right, weaker than expected, the market could rally. So good is bad, bad is good. And he says we are now in a dead period after earnings with concerns about the pace of the reopening. It's still a bit of a question mark, and the bias would be higher after a weaker number. Bad is good, good is bad. So basically, a lot is riding on these jobs reports. Essentially, if these jobs reports show, hey, the economy is coming back, then that would force the Fed to start thinking about tapering their bond purchases. And this has just been a big back and forth thing about when they will. Now, Jerome Powell himself has said when the time comes, he will give the market adequate, notice. So much of that language has not even changed. Even when they had their FOMC meeting this past week, it still sounds the same. So that's just something to watch out for. My personal opinion is that I don't know if the jobs market has recovered like most analysts think. I'm still seeing just when ground level eyesight, the things that I see is that I still see a bunch of help wanted signs. I still know a bunch of people who haven't gone back to work. Take into account kids haven't gone back to school yet. So I'm actually expecting this number to be a little bit weaker. But, I could be wrong. That's, again, just my personal opinion. So I'm going to be paying close attention to this number on Friday. And so, again, the article the link of the article is down in the description of the video. So if you want to finish reading that, go ahead and take a look. He does talk about a reflation trade. They talk about the treasury yield and some other stuff. But the main thing I wanted you guys to really lock in on was this information here, because I thought that was like a hidden gem. So with that being said, what we're going to do now is let's get into the technicals. All right, guys. So now we are into the technicals. And as you all know, we like to start it off with the Nasdaq. So let's look at the Nasdaq. Last week, we were down 1.1%. So we went down 164 points. But under the surface, it felt a little bit worse. So let's zoom in and kind of examine what we expect for this upcoming week. So I'm gonna just provide you guys with the weekly levels, and then we'll zoom down real quick. So with the information that we have, right? So we know the top last week was 14,863. And then we had hit a low, and I'm just going to move that around, of 14,503, basically 14,500, right? So that is probably the range that we would trade in this upcoming week, right? So if we take the context from that article, you say, hey, I think we'll be range bound until Friday. What does that range look like? So I'm pretty sure that's going to be our range. So if you look, and if we zoom in, so this is now a daily chart. You can see this was the last expiration on the 16th. And what has happened since the July expiration is that we went on a nice run, 1, 2, 3, 4, 5, 6 days. Now this was a gap down, but we bounced here. So I consider that a good day because it was a green candle, even though we gapped down, but that was a bounce. So we had 6 straight days, then we had another pullback, right? And we hit our 14,500 support. And then from there, it retreated back up, and then we're kind of just been stuck in this range bound. Now you can see here's my trend line, and we closed right on it. And this is also the 20-day moving average. So what do we expect going into Friday? So let me just add a vertical line here just so y'all can get a feel for when Friday is. So Friday is this purple line. So this is the amount of days we have left, and this is the trend line. So I'm expecting that we'll probably stay within this trend line. So Monday, we probably could either gap down or gap up, but this is the trading range that will more than likely for the Nasdaq stay within. So I'm not expecting us to get no higher than 14,863 and probably won't go no lower than 14,500 until Friday. Once Friday comes, it's either we're going to break above or we may break down. And so if we're breaking above, I would say the target then for me is about 14,900, 15,000. And to the downside, I'd be expecting for us to come all the way back down here, which was the low on July 8th of about 14,370. So I have 14,366. So, give or take a level. Now, remember, we have this gap. There's a gap up in here. So this low is 14,230, which is where we open. So to the downside, we have a 50-day exponential moving average, which is at 14,330 or roughly. So again, Friday, if we make a big move, if the market makes a big move to the upside, I'm expecting 14,950, maybe to 15,000. If we go to the downside, then I'm looking for 14.5 down to about 14,350 or so, basically coming down to the 50-day exponential moving average. And so that's what we're looking at for the Nasdaq. That's kind of what I see for this upcoming week. So I would be very, very careful if you're planning to do any trading, because it's probably going to be, if you're in options, it's probably going to be a premium killer unless you're trading specific stocks. But when you just look at the broader index, it looks like we'll be pretty flat. So that's the Nasdaq for the week. With that being said, let's go ahead and get into the triple Qs. So looking at the triple Qs, now this is a daily. Let's go back to our weekly to kind of kick it off. So you can see last week we were down just about 1%. So 0.99% is what we were down. Now the week before we did an amazing 2.96%, almost 3%. So we gave back about 1%. So even if you bought at this low here last week, you're still up about 2% from a stock perspective or index perspective. Now again, range bound, right? So let's go and look at what our range is for what we did last week. So our high was 368.89, and then our low was 360.16. So that's probably that range that we're going to stay within this upcoming week once again. So let's drill down to a daily perspective. So when we look at our daily chart, again, we close right above our 20-day exponential moving average, which is a good thing. So we're still tilted towards the bulls. However, when we look at our levels, what to expect for next week, I have a high target of still 368.92. So if we get back to the highs, that'll be what we'll go challenge. We could see a small breakout to about 370, but I don't expect this to go no higher than 370. And that's to the upside, right? Now, the key thing that we have to defend is we have to defend this 20-day moving average, which is about 362. If we break below this 362 and get a close below 362, then you can see our first line of defense is going to be 359, basically 360. If that breaks down, then more than likely will be coming down to right where our Bollinger Bands is. And if you can see, this is where there's a gap here from when we had gap down on that 16th to the 19th. So that would put us roughly around 355 to 354, high 354s. And again, I don't think that will provide much support. So more than likely we would come touch right here, whereas our 50-day exponential moving average, and which is the low, which is about 352. So that's going to be where, to the downside, I'll be looking for the triple Qs to come down to. Again, that's on Friday. So let's go ahead and add that in. So by Friday, so if we're trading within this range all week until we get to Friday, we probably could, like I said, go as high as 367, 368. If Friday, the numbers are bad, we could break out and go to about 370. If the numbers are good, we could possibly break down and have that sell off and come all the way back down to about 352. So those are the levels that you want to pay attention to on the triple Qs. So just pay attention to that, guys. Just know that we also are entering what is typically a seasonally weak period. So keep your bullishness in check and just really pay more attention to, if we start to break down. So that is the triple Qs. And what we're going to get into next is our beloved SPX. So looking at the SPX, let's go back to our weekly chart. Sorry, guys. So I'm just testing some things about this correction. But anyway, so range bound again. Our top was last week was 44.29, roughly 44.30. And we hit a low, let me get rid of that, of 43.72. So that is going to probably be the range that we'll be stuck in, right? So let's drill down and take a closer look at what exactly happened on the SPX. So when we drill down, and let me just go ahead and add our Friday vertical line in so that way we know where we're at. So as you can see, since the 23rd, the SPX has been trapped in this range from 44.30 all the way down to about 43.72. And we did this on the 27th. We came down and it looks like we tried to fill this gap, but then we got rejection, right? And so then you have basically a doji indecision, then we bounced up, but then we got some rejection here or profit taking. And then now we have another thin doji, and again, the market needs to make a decision. So this is indecision. So the market does not know if it wants to go up or down. So what are those levels to pay attention to? As we talked about it from a weekly perspective, to the high side, again, looking for us to challenge the 44.30. If we can break above that on Friday, then the level I would be expecting for us to go to is 44.50. The Bollinger Band has it set about 44.45. So the numbers I would be looking to for the upside would be 44.50. And if we really get just a crazy push, then more than likely we could be headed to 4,500. But again, keep your bullishness in check. So I am looking for 44.50 to the high side. Now, to the downside, what we really need to pay attention to, first line of defense is 43.72. Okay, you can see that's right where our 20-day moving average is, and as well as that's what our low was. So if we come back down, this level needs to hold. If this level does not hold, you can already see where we are headed. So we would be headed to 43.23, which lines up perfectly with the 16th. So if we close under here, you can see they'll sell us off down to about 43.23. And if it really gets worse, then we could expect a full sell-off, kind of like what we got here on the 19th, that Monday, which is when the SPX sold off all the way from 43.70 all the way down to 42.33. Now, we may not get all the way to 42.33 because we do have some support here at 42.88. You can see there was an indecision doji right here. So I'll add in another level here as far as, okay, this could be a line of defense. So 42.87, right? That could possibly be a line of defense as far as where buyers might step in and kind of support us from further breakdown, which is right at that 50-day exponential moving average. And so coming into next week, again, high side 44.30. We have to get past that in order for us to really continue upside action. But to the downside, pay attention to 43.72. If that breaks, 43.23. And if that breaks, we're coming down to 42.88, which is right at our 50-day. And if that goes, then get ready for 42.33 before we have any type of support coming in. So yeah, we're entering that week period. So I don't want to get people hopes up, but I actually want you to start thinking about how can you protect your downside, because if you see the pattern, we usually make a move up and then we come down, make a move up and come down. So we've made our move up. Is it time for us to start coming down? I don't think so just yet. Maybe trade flat going into this week. Let me get a decision, whether it's up or down. And then August 20th is the monthly expiration. And that's probably what we'll see, either more buying pressure or selling pressure. And so that's the SPX. So with that being said, let's get into the SPY. All right. So looking at the SPY, this is where we're at. This is the SPY. So I got a ton of levels marked here. This is some gaps that need to get filled. So you can see eventually we are coming back down. But anyway, let's take a look. So I'm going to just tighten this up just a tad bit. Get rid of that. All right, let's dig in. So last week, only lost about a third of a percent, which isn't bad, especially after last week or the week before that we had 2%. So we barely gave anything back. So the range that we probably could trade in for the SPY would be a high of 441.80, and then our low was 435.99, so about 436 basically, right? So let's take it to a daily so we can really see what is popping here. All right, so you can see we have this gap up in here, right? And then we had a hammer that came in and tried to fill that. Well, it did hit that gap, but then we got some rejection. Another hammer with more rejection. So people were stepping in, really wasn't a lot of selling pressure. We got to bounce up, and then now we have it down. So again, these are like really indecision candles. This is actually retail money as well, because institutions make candles like this, right? These big full, only institutions can do this type of movement. When you see these smaller type of candles, that's usually just retail money in there trading or whatever. So going into August 6th, right, we're probably going to trade in this range. So we'll trade between 441 and 438 until Friday when a decision has to be made. So where could we go? If the data is bad and we decide to go up, then I will be looking for us to break this 441 and go to 445. That's my high side target. Now the Bollinger Band does give us a 443, so just pay attention to that. To the downside, again, the support levels I have will be 435.90, roughly 436, which is right where the 20-day exponential moving average is. If that gives way, you already see what we're doing. We're going to drop down like this candle right here, and we're going to come straight to 431. 431 would be the next level of support. And if that gives way, we're going to do the same thing we did here, which is we're going to break down from 430 and possibly come down to 424. Now, again, do pay attention. There could be some line of defense here at this 428 because that is where our 50-day exponential moving average is. So we could find some support there, but I pretty much think there'd be a retest and we come break down a little bit further and hit this before we get a bounce back up to the 428. So those are the levels to pay attention to on the SPY. The SPY is gonna be very telling. We'll probably just kind of trade within this range until we get to about Friday. And then Friday is when the big move will be decided, unless Wall Street wants to give us some cheat codes ahead of time and kind of give us a feel of which way they're going. So just pay attention to those levels during this week. That could be really helpful for you. And so that is the SPY. So now let's get into the Dow Jones. Now the Dow Jones, it looks like, and I want to just show y'all this really quick, but it looks like it's starting to form like a double top. And what do I mean by a double top? Well, let me put it on a weekly, right? So it's having a really hard time getting past this. Basically, you can call it 35,000, right? Because if I change this to candles, you'll see there's some wicks that kind of probably put us up there. But just from a line perspective, you can see we get here, we get rejected, get higher or get to this 34.8, got rejected again. We got up here, got rejected. Now we're slowly inching through, so it looks like it wants to kind of plow through and get to about 35.5. But it also could be setting us up for that M, and then it comes straight down. So let's actually get into what happened last week, right? So the top range for the Dow, the high was 35,171, and the low was 34,871. So that'll probably, I don't think that's going to be the range we're trading, because that's the Dow is just has a much wider trading range. So I'm thinking this will be more like this 34.5. But let's dig in. Let's dig in. So going to the daily chart, as you can see, we got a lot of just sideways action in this zone. When we get in this trading zone right here, which is, and I'll actually fix that again. Yeah, so we get in this trading zone between 35,150 all the way down to about 34,869. We're just choppy, you know, we're just choppy, we're stuck. So what could possibly happen next week? So let's find August 6th, because that's Friday. Drag that over. All right, so this is probably going to be the trading range that we'll be in until a decision is made. So if we break above 35,150, then I got us going as high as 35,350. Again, could push 35.5. I don't know if we would stay up there. We probably would hit 35,500. That'd be a take profit area, and then they probably sell us back down to finish at about 35,350. So pay attention to that, right? If we don't get above this 35,150 and we break down, so bears, get your bear suit ready. You can already see that we have a 20-day exponential moving average at 34.8. I don't think that's going to hold, because we have this big old gap here that needs to get filled. So more than likely, I would have us coming down to at least right here, which would be 34,518. You can round down, round up, 34,500, nice even number, right? And that puts us right by our 50-day exponential moving average. And if that gives way, then of course you can probably see some support step back in, or that final area support would be about 34,175. And if that doesn't hold, then the next level is pretty much way down here when we dropped on that 19th, which is 33,750 roughly. So yeah, the Dow, we need that to hold it together. So we'll see what happens. This is the area I'm really paying attention to. This gap, that has me really worried. And the fact that we really can't break out tells me that we probably need to come, you know, fill this gap before we can have further upward momentum. But I could be wrong. We'll see what happens. That's the beauty of technical analysis, you know, see how your thesis play out. So that's my thesis or thoughts on the Dow Jones for next week, the levels to pay attention to. With that being said, we're going to get into the DIA, which is the Dow Jones ETF. And again, you can see it's very similar to the Dow Jones and how it trades. It's been stuck in this zone for roughly like 2-3 weeks. And so it would probably be in this same trading zone, right? So yeah, some levels here just so y'all can see those. So to the high side, 351.78 is our high. So if we try to put, well, actually, yeah, that is still a high, but I just want to adjust it, try to match it to this, because this kind of marks the top. This is probably what marks the top, because as you can see, and I'm gonna show y'all something really dope, right? When this was the top, look at the RSI. Since then, the RSI has not come nowhere near close to touching 70 this whole time. And yet, what do you see happening? A lot of selling was up in here. So that was a lot of profit taking. I mean, look at all that volume, a lot of profit taking. And now you just have retail buyers buying in. And then you can see big profit taken by Wall Street, big profit taking, more profit taking. So don't get trapped. Like, don't get trapped, bulls. So paying attention to the DIA, if we get above the 351, then again, to the high side, I would have us going to about 350, 351. Could break out and test for 355, but keep your expectations, you know, low. So 353 would be the high if we got through. If not, the levels to pay attention to as far as levels of support or where you could short down to would be 348.40, which is right at our 20-day exponential moving average. As you guys can see, there's some gaps right in here, 345, right? So 345, boom, puts us right at the 50-day exponential moving average, and look at all this cleanup that it has to do, right? Now, if we get to 345 and this does not hold, you already see where we're going. We're coming down to about 340. And if 340 doesn't hold, look where we have, there's not a lot of support down here. So we probably could come all the way down as low as 331. Now, I ain't saying it would happen all in the week span, but in 2-3 week span, that's definitely possible. So, you know, as we continue to do our setup Sundays, we'll revisit this to see, okay, how are we tracking? But I don't like this setup. I think we, you know, the bears are getting ready. So tread lightly. So that's the DIA, Dow Jones ETF, if you want to trade that. So let's look at the US 10-year Treasury note. So looking at the US 10-year Treasury note, and we'll put this on the weekly. We have been tracking this as well. So as you can see, last week, the US Treasury put in what perceives to be a bottom. I think, you know, this is a nice pin bar, usually represents a reversal here. However, this past week, we were down another 4%, which could just be a retest. And then, so it'd be interesting to see if this first week of August, does the US 10-year pop back up to get back to roughly 1.3? I'd like to see it get back to 1.3. If it doesn't get back to this 1.3, then we could have further downside pressure back down to this 1.12. And if you look at it from a weekly perspective, again, if that breaks down, we could be looking at coming all the way down to about 1.06 or 1.05, which that wouldn't be good. I know most people say, hey, well, when the US 10-year Treasury going down, isn't that good for tech? Yeah, but this could also be pointing to bigger problems within the greater economy. And so retreating yield like that isn't necessarily a positive. That could also spell for some trouble. So let's look at it from a daily perspective. As you can see, it looks like it's trying to start basing out right under the 200-day exponential moving average. However, if you know death crosses and golden crosses, it's look like it's headed towards a death cross right now in this daily perspective. Now, I just don't think that Wall Street is going to let that happen. So they're building this base. As I said, it looks like it was a retest, which it was, because we closed right where we closed when we had that bottom out candle right here. We had a nice pin bar. We bounced up. Now we're inside of this candle, and we haven't broken past this reversal hammer right here. So when you put all that together, that's how you get the pin bar. But now what I would be looking to see is on Monday, do we bounce and come back up to the 128? And do we continue to finally get back to the 132, which is where our 200-day exponential movement average is? Again, to the downside, 1.12, 1.105. And so that's the US 10-year Treasury. Definitely need to keep your eye on that, because, you know, that's another economic data point that is feeding into the market right now that could give you a sense of, okay, which way is the market leaning? So that's the US 10-year Treasury. Definitely add that to your watch list to pay attention to. Now what we're going to do is we're going to get into the VIX. You got to pay attention to the VIX, because the VIX is what they call, you know, that fear gauge. You can also use the Fear and Greed Index on CNN. But let's check out the VIX, right? So for the VIX, we did finish last week up about 6%. So our low was 17, our high was 20. Usually when the VIX gets to 20, that signals a correction. But this, we didn't necessarily fully correct yet. And as you can see, we just kind of were range bound. So from here, this is another thing that I want to show you guys from a line chart perspective, is that the VIX is forming a hell of a base, and it looks like it's ready to swoop up, especially as we head into August and September, when we know there's historically pullbacks. This VIX is forming a hell of a base. And let me show you what I mean by that. Look at that. So it, you know, it bounced up, down, bounced up, you know, up, down, up, down, up, down. And now it's got a nice base, right? This nice little swoop, in order for us to get back up to about 27, 28. I mean, this thing could really blast off. Definitely could push towards 23 or 25, but is where it went last time. So let me just change this to a candle perspective so you can see. Week before last, it went all the way up to 25. So we could actually get another week where we go up and get a full green candle, and we finish at 23 and 25, signaling, hey, the correction is about to start. If not, to the downside, I would love to see us break below the 17.7. So I have about 17.2. If we can break down and come back to roughly about 15.7, that'd be great. I just think the VIX is in such a tight bound range that I don't know if we'll get that low. I mean, look at my TTM squeeze. When these three dots turn like this, it's starting to fire up. And so it's looking like it's ready to go to the momentum is going to the upside, meaning that the VIX wants to go up. But again, that's something I'm going to continue to watch. When we look at it from a daily perspective, you can see we have two red hammers. Well, actually three, because look at that. You know, they're really selling off that VIX or getting that VIX fill. So we're still closing above the 50-day exponential moving average, as well as we have a positive sloping 20-day moving average that's about to cross over, which is a bullish sign. So that means, hey, the VIX could be looking to go up to about 20.89, 21. And if we get above that, then you see what happened last time. We had a big run to about 22, went as high as 23. And like I said, we hit 25. So for the VIX, pay attention. Once the VIX gets to about 19 to 20, you should be on high alert. You should definitely be on high alert. If we can break below this 17.2, then we could be in the clear. And as you can see, there's a lot of space down here to where we can get below 16 and head down to these lower levels. That would just, you know, be a positive thing for the market and kind of saying, hey, we're out of a volatile period, which we know we're not. So I just don't see that happening. I just don't see that happening. But again, it's just my opinion. It's just my opinion. So I would love to hear your thoughts. Drop a comment below on what you see possibly happening. But that's the VIX. So I just wanted to walk y'all through that. Let's wrap it up with Bitcoin and Ethereum. So getting into Bitcoin, let's go to a weekly chart. Actually, I'm gonna leave this on so y'all can see I got some fib levels here. I'll give this to you guys for free. So these are the levels that you really need to pay attention to for Bitcoin. Our high was about 65K, so 64,895. Then we have our 0.786 retracement level, which is at roughly about 54,767. So say 55K. Then we have our 0.618 level, which is at 46,816. And then we have our 50% retracement, which was about 41,231. Now, and then we have our 0.38, which is 35,647, and then 0.23, which is 28,737. Now, I want you to see how beautiful from the top to this low that Bitcoin has respected these levels. So last week I said, hey, I would love to see Bitcoin get to about 38K. Literally, I think by the time I uploaded and processed the video, it was already at 38K. And we actually closed, or we're looking to close. So we have about 8 hours left on this Sunday for Bitcoin. It has to close above 41,231. We're at 41,532. If we hold that, I fully expect for Bitcoin to make a run to this 46,816. But I don't think it will hold that. So we'll probably come back down to about 45K. That's where I think we'll end up holding, because you can see there's going to be some resistance when you get here, as well as when you get here. And there's a hell of a sell wall here that we have to break down. So next week, or this upcoming week, first week of August, we could see Bitcoin start to recover and go from 41, push to about 46. And if it can get through 46, this thing could go to 54. And remember last week I said Bitcoin could get to 59 in the blink of an eye, and I'll be damned if it ain't playing out how I talked about it. So just pay attention to that, right? So for the rest of the weekend, going into Monday, let's see where Bitcoin is, and if overnight, if Bitcoin gets like, you know, some more price action to push it up. Because if we get to 45K by Monday morning, I definitely would expect for us to get to 46 and then just kind of just hover in this range, because that's all we did this past week. And now I will remove this so you guys can see the daily movement that we had last week for Bitcoin. So this was, I think the 26th was Sunday. Yeah, I think the 26th was Sunday, or the 25th. Either way, last week or Sunday when I did the video, we were somewhere in this area, because I was like, I needed to get to 38, and then we got there, right? So this is what happened during the week. We just, you know, kind of fluttered and stayed on our 200-day moving average. And now what you see is our 50-day as well as our 20-day moving average are positively sloping, meaning we are about to get the golden cross or the money cross. Shout out to my girl Kiki. On a daily perspective, if this 50-day crosses that 200, you're going to see not this red plus sign, it'll be a green plus sign, meaning, hey, the bulls are in charge. So I'm definitely paying attention to that. I think Bitcoin could probably continue to base out, and then finally at a, Friday, right? Friday, we keep talking about that's a big day, depending on what that report looks like. We could be just hovering at this 41. Friday comes out, and then boom, we get a big push and we go to 45, 46K on Friday for Bitcoin. So definitely pay attention to Bitcoin and how it starts to move. We could get a pullback. So to the downside, if you thought you missed your entry, should have been buying when it was down here. However, if you're one of those late birds you want to get in, I would possibly wait for it to come back down to about 38.9, somewhere around 38.8, possibly even 35K to come touch these moving averages. But we just have to watch to see how the price action plays out the rest of the week. So that's Bitcoin. That is Bitcoin. Now let's get into my boo Ethereum. Same thing. I'll show you guys my fib levels for Ethereum, so you can see where we're headed and just how beautiful it trades within your fib levels. I mean, look at this breakdown. It broke down from the 0.786 level and came straight to our 0.36 level, which is at 1706. One swoop, boom. Then our 0.38 level was at 2215, which basically where we opened last week. And now we are at our 0.5 level, which is 2626. Look at that. We're at 2595. So if Ethereum can close at about 2600, that could clear it to come to, again, 3000. I'll be looking forward to get to 3000. If you see where we are, we're in this period where it just slowly crept up, and then finally it had a big breakout and then got to 3000. So I'll be looking for Ethereum to make a move next week to about 3,000. If it gets to 3,000, it could push to about 3,600, 3,500 is where the top of the Bollinger Band is, as well as you'll reach some resistance right here. So 3,500, 3,600 would be the number to look for. But the first number we got to get to is 3,000. So you want to pay attention to that 3,000 level. If Ethereum and Bitcoin start to break down, then again, we'll be coming back down to about 2215. And if that gives way, then I have a level here, which is about 1960. So 2000 could hold. And if 2000 doesn't hold, then again, we probably come test our 1706, somewhere around 1720, 1750 is where it's been stopping, though. It hasn't been getting completely down to that level. And so let me remove that. So that is Ethereum, guys. When we break it down from a daily perspective, as you can see, it has been running. It has been running. So that's the thing that you got to be careful about. We had a big reversal candle here, and then since then it's been running, and people have been accumulating and buying. So the thing we need to see is, okay, does it have enough leg room to continue pushing to get us, up into these areas, that 2,800 level, even pushing possibly 3,000, or do we just get to this 2,600 and then start to trade sideways, kind of flat, and then ultimately, come to a little quick pullback and break down to about 23 before finally bouncing up and going to this 3,000 and 3,300 level. So that'll be the thing to pay attention to. But this is a beautiful W. Like if I change it to a line, look at that W. Boom, 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 boom. That's a beautiful W. If I change it to the weekly, you can see it even better. Boom, 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 boom. Nice, beautiful W. This is why I like using line graphs, because it really tells you the levels. I mean, look at that. We bounced perfectly off of what this level was here from a closed perspective. So these pivot points are based on open and closes, not the wicks. I just wanted to point that out. But yeah, Ethereum is looking good. I like where Ethereum is at right now. Y'all, I've been saying it for the longest. Ethereum is my favorite, and I do think by the end of the year we could see Ethereum back at 5,000 or more. So that's Ethereum. So all right, family, that is Setup Sunday. I'll walk you through all the major indices as well as the crypto charts that we pay attention to. So I just want to leave you guys with this message for this week. We are, as that article said, entering a period where there's no earnings, not going to be much economic news outside of, what we know what's to come as far as just the Jackson Hole meeting towards the end of August. We know September is historically weak And if you were in the markets last year, I want you guys to remember what happened during August and September. August, we had a huge, run up, and in September, we had a pretty big correction. So I want you guys to just start prepping yourself for those things to come. Markets don't always go up, they do go down. And with that being said, if you are participating in this market, then you might want to start getting some cash ready, because within the next couple weeks or so, even headed towards probably the end of September, you could be presented with some significant opportunities for long-term success. If we do experience a 10 to 20% correction, those will be levels that in 5 years you will have wished you were buying at. So, do what you can to prepare, study, get yourself in a position to be able to take advantage of what's to come, whether you're playing it to the downside or the upside. And the last thing is just don't try to anticipate what's going to happen. Again, I learned this from a good friend, is let the market show you what it's going to do, and then do what the market is doing, right? You don't have to be able to predict the market to make money. So a lot of people want to get that perfect entry, or get that entry at the very bottom, so you get the best pricing, depending on if you trading options or buying stock. But wait for that confirmation. When you see, hey, all right, we're going to the downside, then you can get into your puts or shorting. And same thing for the upside. Once you see, okay, it's look like we got some momentum, we're bouncing solid, all right, then you can get in to play the upside. But if you try to anticipate and you guess wrong, that's how you could lose a lot of money. So I just want you guys to just be patient, stick to your plans, stick to your studies and what you know to come. And with that being said, guys, you already know the phrase, stay blessed and peace out.
Run it up, run it up, run it up. We out for generational wealth. Who else but us? Run it up, run it up, run it up. This is first gen wealth building.